Hey. So, welcome back to episode 2 of the Fib Podcast. So, today is probably going to be a little different. As you can see, I have got my screen and everything up from last week. I've already done the weekly bias video. So that's already gone out for what I'm looking at next week. It's the same thing that you see here. This week I kind of just wanted to go into just your psychology and your trade plan, because that's one of the things that this past week, and I even said it in the forecast. I feel like this past week started out like last week. Wasn't a great Monday. Again, it's the think you see, and that's kind of what I wanted to talk about a little bit in this podcast. I still have to update the community tab with results, because there's a whole lot of capization going on around, not just in our industry, but just in general. People just they about that bullshit. Like they're full of crap when they say, oh, well, I took this entry, because if you go back and you look at the weekly bias video, the outlook from this previous week, and then the outlook for next week, I literally show, as I'm walking through this specific chart, there is basically my long short tool, and it would appear that I took this long, when in fact I didn't. And I was clear about saying I did not take this position. Like when this was happening, I was on the opposite side. I was looking for the short. I wasn't looking for that. That's what I should have been looking at, based on what the bigger picture structural analysis was. So I'll make sure to do that, because I was, overall, I'm not. And this is why, again, I know I'm jumping ping, but it's important. I'm not really down on myself. I'm kicking myself in the ass a little bit, because I knew what I should have been doing. I knew it was expected, and I thought that I could do more, which is something that quite a few, should I say a few? Maybe, because there are probably a few people out there that don't say it as black and white as maybe ICT or there's another gentleman by the name of he goes on YouTube by the name of MentFX, so I'll just call him MentFX. There's some people like that will tell you that until you stop, you recognize what you're doing, and you stop getting in your own way, like you're inevitably going to make the same mistakes. So for me, it took me a while to get out of my way, and then this past week I got back in it. It's probably the easiest way that I could say it. So this week started out like last week, which says that I made the same mistake this week that I did last week on a Monday. Last Tuesday, I completely dug myself out of the holes, and then I kept, building on that momentum. So last week was an up week. This past Tuesday, I dug myself out of the hole from Monday. So it looked like everything was on the up and up. But again, I'm kind of repeating some things, but for the people that don't watch the one video and then they come and watch this podcast episode, it'll make more sense. But the long and the short of it was, I was not efficient. And when I say I wasn't time efficient in looking at the overall. Last week, I was pretty concise, just to, even in the live streams and the executions, albeit whether or not they were successful or they were failures, I was pretty concise to that 1 minute time frame. But I knew innately, like, what the higher time frame delivery, what my overall target and bias was, because you have to remember, last week I was short too. My bias has been, and this is something that one of my mentors, and I had to go back and revisit a conversation, I want to say yesterday or the day before yesterday, and literally he says it, and I never really thought about myself that way, and this is why I think it's important for somebody else that's out there that might be struggling with the ability of, again, getting out of your own way, is that I am a contrarian, meaning if everything gives the indication, everything is saying, hey, price is going in this given direction, it's going here right now, like everything should speak to you're looking for an opportunity to get in there. I am not necessarily of the expansionist mindset that says that the market is overextended. I don't believe in the whole it's exhausted because can't push price any. Like I don't believe in that. What I look at is the relative opportunity to, okay, I don't know how far, right? But when I'm looking at certain intermediary structural narratives, which is what I did this week versus last week. Last week I had the picture. I knew what it was, even though I was on a 1 minute. I kind of knew, even though I was short. But when my bias was short, but I'm looking concisely at, okay, it's delivering long, take the long. Okay, this is an intermediary, or this is a short-term break. Short, okay. What's the structural narrative? Okay, take the short. And I would get in, but I was also getting out. I wasn't allowing price to run to the point where it would then start to reverse and run against me. I was taking what was on the table, and when I felt like, okay, I don't really see that, mitigating, or I don't see that progressing, I don't see that taking out that low. Let me just take what's off the table right now and then just stop, and then let's just follow it and see. So management could be a part of that, but I think that my overall analysis of the markets last week was a lot better than this week. This week I was a little bit more open to the prospect of saying, I've set this range or this limit or whatever it was, let it do what it's going to do. Like if it's going to stop you out, it's going to stop you out. If it's going to run, let it run. So that to that perspective. So I've learned, and this might be how you are too, I would say, and it's kind of twofold, where a lot of people will say, well, isn't that emotional? Aren't you operating off of emotion? I tend to err on the side of, call it speculator intuition, whatever you want to call it. If you're looking at a market and you're looking for it to deliver, you're looking for a specific zone, area, a specific point in price where you think it's going to turn around, it's going to do whatever it's going to do, but maybe your target is beyond that point. This is just me. I'm not giving you advice, but I'm just saying it's something maybe you could go back and you could back test, blindly test a sister market or whatever asset that you're trading, and just go back and look at it and say, okay, what's my thought process when it gets to X? Should I take it off? Okay. If you're back testing and you're doing some level of replay, I would suggest maybe doing it in a replay, because going back to look at live price action, we can always assume that when we see how price actually delivered, that we would actually hold it to that point, and that's just not that's probably one of the biggest I think it's a disadvantage that you put yourself at, and I personally, I was always let me do it in market replay on a daily, let me do it in market replay on a weekly, because the time frame doesn't really matter, because that daily, that weekly can be done on a minute, a 15, a 5, it doesn't matter. It's all fractal anyway. So for anybody that says, well, you're doing it, on a higher side, same thing is going to happen there. So if you're understanding structure, if you're understanding delivery and those types of things, again, everything in its context, if you're looking for a short-term move against the overall or prevailing trend, or a move against where, price is looking to reach, where's the inefficiency, where's the fair value gap, where's the gap in price, whatever it is, what's it reaching for? If you figure that out and you say, okay, it's reaching there, but it's going in the opposite direction, it's not reaching there yet, where might it be retracing to? I used to be that kind of contrarian. I would literally try to trade the retracement back into a zone to take it to a draw on liquidity, and that might actually be why I've been on this journey this will be year 5. because yours truly had enough, and I call them psychological losses, because when I was trading that way, not even a complete 2 years ago, but I don't even want to use the word successful. I would say that I was efficiently lucky, because those currency markets and that's primarily what it was, because I've only been in futures since like last August, September is when I like really just said I'm focused on futures. But up until that point, I was just really efficient and fortunate that price was running in those directions, and it gives you like a false narrative that, hey, you know what you're doing. I was being foolish, and while the risk might have been minimal at the beginning, the more I guess you could say courageous you get in taking those kinds of positions, thinking that you're on the right side, you get liquidated. On top of the fact that I didn't understand, I can say this now, and if you're honest with yourself, depending upon where you are in the journey, you probably are the same way. I thought I understood and could read market structure, and I couldn't. I like, even now you can get faked out, but it's not, I'm not lost now. When you see basically like we're looking at here, grab my cursor here. I'm not lost in this structure anymore. But the biggest part about not being lost is when you see the overall, right? So as you go into any market, you go into any speculatory analysis, I would just tell you, always look at the bigger picture. Try to get the bigger picture in price. Look at where those draws are, where you suspect that they're gonna go, and then don't operate on the impulse. Okay, I started, or I will be rather, starting basically my 50K combine all over again. Now, granted, I had built it up to the point where I was about maybe 1,500 away from hitting my profit target in my combine. But like I said, I'm essentially just like back to scratch. I'm back to zero. I didn't blow the account. I don't have to use a reset or anything like that. So that's, if to take the positives and the pluses and the saliva apparently, but to take the positives and the pluses away, I'd built up enough of that buffer in the account to where, obviously that's not something that you want to do, but if it were going to happen, you don't want it to happen, but if it's going to happen, yeah, with a buffer, okay. So it's a case where now I can look at it and I can say, well, you know what, now I have to make 45 to make the 3. It's a 50K. My profit target is 3,000. I made 15. I'm back to zero. So now I'm going to have to make basically the 3, which is going to be 45 in total. Now, somebody would look at that and say, well, damn, now that's just dumb. You shouldn't have to do that. And they would be right. You shouldn't have to. So risk management hasn't really necessarily been a problem for me. This week it was revenge trading. And I would call it that because I just knew I was right. I just had to be right. Emotional. So I would say as you're, progressing in this space, just try to be as basic as possible. Basic. I've changed up my charting, and the interesting thing is, like, the likelihood is just moving forward the same way you see my chart laid out here is probably when I do my live streams and live executions and even my tape reading. It's more or less going to be what you see on the screen right now. And the reason that I'm doing this is because I'm trying to be a student of exactly what I'm talking about. Keep the overall perspective of what's going on in front of you. So even from this 15, if I go down to a minute, I'm going to have the understanding that, hey, I can just go back up to my bellwether and I can see everything. And also just being that level of basic is, if there's nothing, there really only, I would say maybe 2 or 3 criteria to enter any position at this point, when you keep everything in its proper context. Something's been run. There's a liquidity run somewhere. There's an inefficiency of price at some level that's been tapped into, or orders have been paired, or there's a void that's been filled, right? Those are realistically like the only 2. The external or the inner range liquidity has been swept or taken. Those are the only reasons to say, okay, now we might have the possibility of a position to put on. Outside of that, it's just let it do what it's gonna do. That's what I had to kind of tell myself yesterday after taking a trade yesterday, where I shouldn't have taken a trade yesterday. Just let it go. The one thing that over the years I think has helped me a little bit was, if I was taking, say, a live trade in the currency market, if it was cable or whatever it was, it didn't matter what it was. If I was trying to fight that urge to just get back in and take a position in a live account somewhere, I would go into like a TradingView demo account. And what I was doing initially was, okay, let me just work on setups. Let me see what I see. Let me try to understand, okay, is this a structural break? Is this a liquidity run? Has a buy side or sell side, swept out? Okay, has it created a market structure shift going back? Like, I was just in the demo looking for that, but it was to kind of quell the emotional side of, let's get into another one because we were able to pull that one off. That helped a little. Actually, I would say it helped a lot, because as I just said, I've been focused on futures since like August. I've traded, and that's my goal actually also for 2024 here as well, is, and so far I've been okay. The objective was, I'm only trading one futures asset, and so far it's been the S&P mini. So that's the one, and the only currency asset, the only currency market has been cable. Cable's been the most traded by me. Now, I have dabbled in EU. I also took a couple on EJ, so euro yen, but it hasn't been what it has been in previous years. In previous years, you could spin the wheel like on freaking Wheel of Fortune, and wherever it landed, there's a good chance that I was trading that market. When it came to currency markets, yeah, I mean, the only thing I wasn't trading for obvious reasons would have been like the ruble and the Turkish lira and maybe the Mexican peso, but like but 2.5 years ago I traded the peso against the dollar. I don't even know if I still have that somewhere, but I was working on, I was doing some ridiculous, it was ridiculous, but it served its purpose. I was utilizing a mean it was kind of like a mean reversion, like, you just allow, and then it was with the moving averages. So like, man, it's weird, because now it's not like I don't want to say that on a podcast, on a stream, because like I said, I think everybody has this space is so infinitely gifted with people that work and that operate within the same industry niche. Like, we're all speculators in a space, but we all have a different framework, even though we could have a general philosophy, how we implement that philosophy into our own personalities and how they get conveyed out on our charting, our analysis. I personally, I think it's pretty beautiful to see, but that in context with where you've come from, especially if you've been looking at I'll just say, because I did it for a minute, you're looking at animal patterns, and you're looking at like the stuff that makes like absolutely no sense when you dumb it down, and it's like, like I said, I was looking at a mean reversion strategy with moving averages. But here's the crazy thing: I didn't know what I didn't know. And I think I'd put on, I should see if I can go back and find that, because I'm pretty sure that I like took pictures and I documented that, because I thought, oh shit, this is it. This is the way, right? I won something like 16 trades, 15, 16 trades in a row. But you know what the problem was? And again, that's why I said, not knowing what you don't know. The problem was, when I was putting those positions on, I was only focused on a take profit. There was no stop loss. So, and I was doing it in a an Awanda account where I think I put like maybe $10 in the account, right? But I was doing basically like the bare minimum in terms of position size, so it was like a 0.01 or whatever it was. So it wasn't even a whole lot, and I was doing it on, I think it might have been EU I was doing it on. So if it was going to run and I was sitting there managing it, so one or two things was going to happen. Like if it continued to expand away and I got extremely uncomfortable, I would just close it. But like I said, I won like 15, 16 trades. But here's the thing: where's my risk management? Where's my risk management? Because the only thing I'm looking at is, okay, it's expanded away, and then we get back to the whole process of this exhaustion, right? Well, it can't move too far away, and it has to come back. Okay, but nobody said when it's supposed to come back. So it's looking at and revisiting those situations, which I think it's imperative to our development in this space. It will help you sort out, weed out areas in your speculation, areas in your trading that when you take an honest self-assessment, you have to realize and say, honestly, like I've done it a few times, and you just have to question yourself and say, okay, what the fuck are you doing? Like, what are you doing? This is the plan, and this is the process. Okay, whenever executing in a live or a demo, and those also need to be succinct as well, which, again, I've gotten to the point where in the past I would just say, hey, let me just do this in a demo, let's see if it works. That will fuck up your psychology more than you actually know. On a very subconscious level, you're introducing something that is going to be completely contrary to your trading plan. Not if your trading plan is contrary to market delivery. Totally different. Then you're really fucking yourself. So again, if I can save, and maybe I'm reaching that one person out there that's like, holy shit, he got me. Whatever your trading plan is, when you're practicing, if you're back testing, if you're tape reading, if you want to just go into the live market in a paper trade or a demo environment, whatever your trade plan, whatever your criteria is, do that in the demo. Do that in the paper trade. Don't assume and say, hey, let me see if this is going to run, because don't do that. Right? I can't tell you, but I'm telling you, don't do that. Because what you will do, and like I said, it is subconscious, because when you find yourself in a live trade and you're looking at price and you're saying, it looks like price is going to run, your subconscious is going to reach back and it's going to grab that, and it's going to say, hey, remember that time you were in the paper trade and you said, hey, let me see if this delivers, and it delivered. This is the same thing. Yeah, do that. Might be totally in conflict with your plan altogether. So that's why I say you have to streamline those processes. I am a part of that, like I said, and I can admit, like, my psychology was completely shot this week because I didn't, my problem was, like I said, I didn't look at the overarching context. I was not in sync with the market that I was looking to take positions and speculate on this week. Not at all. And I was genuinely on the wrong side. Now, I could, at the end of the day, I could turn around and say, well, I was right, but no, I was on the wrong side. What I was anticipating and what I was looking for did not occur. So that's another thing that I'd like to share with you here really quick, and then we're probably going to wrap and I'm going to get up out of here. But admit when you're wrong. Admit when you're wrong. The longer you hold on to the idea of, well, I knew it was going to run there, it just didn't go when I thought it was going to go, but look, it went anyway, don't do that. The reason that you don't want to do that is because it'll take you longer to get out of the pockets and the holes of self-discovery when it comes to like really understanding and appreciating what's happening in the markets or market shifts or what have you. They're always like the nuanced tendency that you overlook. And if you're not holding yourself accountable to say, hey, listen, I thought this was my draw on liquidity at the end of the week, and it doesn't hit that draw on liquidity, but it moves, long or short or whatever, you could say, oh, I was right. It just didn't get there, but I was right. Don't do that. Your expectation was this. That expectation wasn't met. So it was incorrect until there's something that validates that idea later on. So be comfortable with just saying, you know what? This is what I thought was going to happen. It didn't happen. This is what happened instead. Me personally, like looking, and that's one of the reasons why I wanted to do this and have this chart up. My whole idea, and this is basically 2 weeks, I got away with it. Like I said, last week I got away with it because my intuition was telling me at certain points when I was in profit, just cut it. Take the profit, take what's on the table, and get out and leave it. And that worked to my benefit. This week, I was a little bit, a little bit more rigid in my positioning, saying, I'm not listening to intuition. It's going. It's like I was trying to impose myself. And, looking at the market here, can I say, yeah, my draw on liquidity was short? It was originally, but it didn't get there. It didn't. It was going in that direction, but was I able to take advantage of that? No, I wasn't. Even on a day like Wednesday, and then I talked about this in my outlook, and I'll share it with you. And if you watch that outlook, you'll hear me say, I did not catch this long move. Let me open this up so you can see it. And that's the difference. I actually ended up taking a loss. I took a couple of losses on Thursday, which kind of reset me. I took this 2 p.m. candle here on Wednesday, this 2 p.m. New York PM session. I took this small short here. Okay, now everything in hindsight is going to be pristine. So I could sit here and I could say I took this one, and all I had to do was no. I can't. You know why I can't say that? Because at the time that I took this move, my stop, I believe, was literally, it might have been above this high. I think I waited for the liquidity to get swept here. Yeah, I did. Because that's a one. Okay, so I do something a little different. I trade my PM sessions based on the 1 o'clock candle coming out of lunch. So a lot of times what I'll do is I'll look and see, like in here, after the lunch hour, if the lunch hour is concise and that 1 p.m. candle, like the high low of that candle, I'm likely to trade that. So where are we at? That's 115. So this was one. So the 115 candle low to, and you could pick them because they were equal highs. The 145 candle and the 115 candle were relative equal highs. So what I did was 2 o'clock rolled around. The 2 p.m. candle cleared the buy side liquidity of the 1 p.m. candle. It ran the entire lunch. So the lunch hour that nobody should be trading, and oh, by the way, I did that last week too. Don't say anything. But karma. Before I finish this, karma. Just always remember, if you do something that you're not supposed to do, and some people don't believe that way. I am getting philosophical. Am I getting religious? There is an equal and an opposite reaction for everything. So that's why I say last week I was halfway up. This week I'm starting from scratch. So the benefit of solid trading plan trading, and then just some crap that I shouldn't have done that I still benefited and profited from. You know, I got my keister handed back to me. But the long and the short, I traded that one. It traded through the lunch. I was done until Thursday, because I'd watched price move down, and then I again didn't zoom back out and look at the bigger picture. I was looking at Thursday as its own entity. And what do you think I was doing when I saw Asia here? I saw Asia. I said, okay, swept out. London came up. You're going to go short. It didn't go short. It went long into pre-New York AM. Okay, you're setting up again. Didn't look back here at all. Oh, we're going short. No, we're going long. So trust yourself, follow your plan, follow your model. Admit when you either don't know, or just admit when you're wrong. Once you set it out there, which is why I'm going to do my weekly bias, document them, record them, put them up on the channel, and then try to do the recaps at the end of the week to see if we've met the objective, if we're halfway there, or if we were completely fucking wrong about the bias altogether. Like those types of things, again, are not just meant for the YouTube curation. It's also meant for you if you decide that you want to create or record your videos. I do my futures live streams and recordings so I can go back and look at them. Like that's a way for me. I can go look at live price action, but I think the added bonus, if you decide to do it, and you don't have to upload it for, you know, the public to see. There are a lot of idiots and assholes in the space that want to ridicule you, say you don't know how to do something, but the thing that I would stress to you, if this is what you want to do, because this is my attitude about it, I could give 5 fucks about somebody telling me you know you can't trade, you don't know what you're talking about. I don't give a shit. You know why I don't give a shit? Because it's my journey. It's me. It's what my focus and what my drive and what my motivations are. Doesn't have to align with anybody else's. It's what resides with me. So the same should be for you. You give 5 fucks. Well, you might not give 6 fucks, since I give not 5, but you get my point. Like, you don't care. It's for your documentation. And if you don't want to, you know, put yourself in that way, you can just record them, save them. They never have to. They can get uploaded into your Google Drive or whatever it is for you to go back and look at again. Nobody else in the world ever has to know. So it's just an extra layer of, let me go back and replay this week based on my plan. And you just watch price unfold. And then you watch where, you know, you're looking to execute or where you're looking to get in, but you get a different perspective as if you're watching someone else. You know it's you, but take a notepad and a notebook and watch and write and say, okay, I did this when that happened. Okay, I wasn't successful. What was I looking at? Stop the recording. Look at the price. Look at where price is in relationship to where it ended up. And then go back and say, okay, forget about where it is now. Like, I'm in this moment, and focus and study there. And you'll be surprised how you have the aha moments. A lot of people say, oh, well, hindsight's always going to be more beneficial because you'll get a clear view. Yeah, okay, you're right. But what does it also do? It trains you to see certain things that happen in price that, even though they don't happen exactly the same way all the time, again, there's enough repetition to where you say, okay, do I want to wait for an extra confirmation, or is this ready to go? It's all data collection. So stick to the plan. Don't overtrade. Be honest with yourself. If you're wrong, be wrong. Stay wrong. so you can learn. Record, whether public, private, whatever it is. Study those recordings, document your findings. You should already be journaling your trades as it is now, and just keep pressing forward. All right. If nobody else believes in you, I do. If nobody else believes in you, you should believe in yourself. If this is truly something that you want to do, which, you know, they say it's not for everybody. I could agree with that. It's not for everybody. A lot of us in this space, until you reach some level of consistent profitability, you feel like at some point you're banging your head against the wall, like, why are you doing it? But if you love charts, if you love charting, if you love speculation, if you love financial markets, if you enjoy the ability of statistical variances playing out in certain situations, you like technical analysis, what else are we going to do? And I say we because I think there's a good portion of people that just, I'm one of them. I love technical analysis. There's nothing else in this world I would rather do than this, and that's one of the reasons why some of us are fanatical when it comes to, you know, our trading, our chart time, and then you can go from being fanatical to being a normal person for whatever that time duration is. So, all right, but I'm gonna get out of here. I'm gonna let you guys get out of here. Enjoy the rest of your weekend. Have a profitable and safe week next week. I'm gonna shout out Sean again. Sean, what we can do is maybe Monday live stream, and I'll make myself another note. I know the Friday I didn't get in to do it, but we'll do that EU live stream on Monday afternoon. All right, so I'll make sure to get that set up, and I'll get it scheduled so that way no miss. So hope you're doing all right this weekend, and I'll see you Monday. Everybody else, have a safe week. Any comments, suggestions, questions, videos, analysis, market review, anybody want to come on, we can, I'm open to collaboration or just a meeting of the minds, just talking trading, not necessarily trying to pick one version over the next, but anything finance we could definitely get into. All right, so everybody have a great day, enjoy, and I'll see you all next time. Take care.